G'day listeners and welcome to our APS Weekly News Bulletin, keeping you up to date and well informed on the Australian housing market. Today's articles are all about what could shake up the housing market in 2025 and the risk of mortgage stress increases. Story number one, risk of mortgage stress up again in December after Reserve Bank again decided to not cut interest rates. Article by Roy Morgan. 27.9% of mortgage holders are at risk of mortgage stress, the highest in September 2024. The number of Australians at risk of mortgage stress has increased by 788,000 since May 2022 when the RBA began raising interest rates. 17.4% of mortgage holders are considered extremely at risk, significantly above the long-term average over the last 10 years. If the RBA decreases interest rates by 0.25% or more in February, the number of mortgage holders at risk of mortgage stress is projected to decrease overall to 1.54 million by March 2025. Unemployment is a key factor impacting income and mortgage stress, with over 1 in 5 Australian workers currently unemployed or underemployed. Now, guys, pretty key thing around here, obviously interest rates have been super high for the last 2 years, or a little bit over 2 years now, going on 3 years since they started doing the interest rate rises back in 2022. Now, obviously, there's a lot of people that would have come with mortgage stress that have bought properties, with that impetus that their rates were not going to be raised until 2024. It obviously started in early 2022, so it's not surprising to see, obviously, that high number of people at mortgage stress and very susceptible to interest rate movements either up or down. Obviously, the more rate decreases that come through this year, the less mortgage stress is going to come through, and the more people that are able to get their mortgages and their spending costs and everything, their holding costs very much under control. When they say over the last 10 years as well, we have had a pretty significantly low cycle of interest rates during this period. During COVID, obviously, interest rates were down. A lot of people could get them in the 2%. Some people even the 1%. The worst case for most people was in the 3%. So very, very attractive. At the moment, most people are seeing them in the 6 and 7s, even for owner-occupied. So obviously, anything right now to be able to pull them back and this year is going to help a lot with mortgage stress. But it's interesting to see that it is higher. It's not surprising to see, but it is interesting to see that it has been trending higher and higher the longer interest rates have been holding on at this higher interest rate amount. Going to be very interesting to see what happens when interest rates come through, if and when they come through. When is probably the more prudent question. Story number two, guys, what's shaking up the housing market in 2025? Article by Eliza Owens, Head of Research over at CoreLogic. Highlights in this article as well, guys, is lower interest rates are expected to boost housing values and transactions in 2025, but the impact may be limited due to affordability issues. A potential window into how Australians would respond to higher borrowing capacity is the stage 3 tax cuts from 2024. While this would have boosted borrowing capacity through higher net income, the housing market saw an anemic response with growth in values slowing from June 2024. Now, I will save the summary for a lot of this other stuff at the end, but just in regards to that one, I think what's going to be interesting to note and interesting to watch is obviously when this starts coming through in a bit of a bigger way as well, it's actually going to add borrowing capacity into the equation and also reduce the holding costs of both new properties coming in and older properties, current properties being held as well, as opposed to, obviously, tax cuts meaning a little bit more dollars in your pocket. But with actual interest rate cuts coming through, I think it will have more of an impact on affordability and the ability for people to go out, one, borrow more, but for two, carry more with their different properties and be able to afford another property potentially as well, because it's literally going to reduce that bottom line of what the property is specifically going to cost, not just what that investor or homeowner potentially has in their pocket as well. So I think it's going to have more of an impact than the stage 3 tax cuts came through. Number two in this article as well, guys, is changes in lending policies such as adjustments to mortgage serviceability buffers could influence housing finance availability and borrowing capacity. Despite an expected rise in unemployment, it is unlikely to have a significant negative impact on housing values, as the lower inflation and economic demand may offset any potential downturn due to this sector. Net overseas migration peaked at 566,000 in the year to September 2023 and fell to 446,000 by June 2024. According to the Centre for Population, it is expected that net migration will continue declining to about 340,000 people by mid-2025 as the COVID catch-up effect fades as more short-term migrants leave. Slowing net overseas migration is expected to reduce demand on pressure on the rental market, impacting areas with historically high migration rates. Final point here, guys. Residential construction is facing challenges with low new home approvals and high costs, but there are signs of a pickup in certain markets and potential easing of capacity constraints in the future. Now, in summary, guys, and very similar to obviously what we went through in the roundtable for this week as well, all the key things coming into the equation here that are going to affect the property market this year in both a positive and a negative way. I think it's very much going to be, once again, a two-speed property market out there in the country this year. I think different markets will stagnate and potentially go backwards. There are other markets that are going to perform very well this year too. I think, things like the net overseas migration, even though it's dropped back and they're talking about it being 340,000, as a 12-month average, or up to the mid 2025, that's still a massive number, and that's just for migration. Not talking about natural population growth within the country as well. Residential construction still very light on. Still not heaps of projects coming to market. A lot of things still being shelved. We're not catching up anywhere near to the targets set out by the federal government as well. When you throw in on top, we're going to have lower interest rates, potential for a serviceability buffer change, although I think that's, neither here nor there. I don't know, how likely that is to be changed in 2025. But you throw in, and on top of the fact, we could see 3 to 4 rate cuts over the year of 2025. And I think it is going to prove to be another good year in property for Australian property investors. The key, as always, will be finding where still has the run left in the tank, where is going to be positively impacted by different things coming in, different changes both from interest rates, migration still in the equation, all these different things, projects in the pipelines that are driving people to areas, all these different things, guys, are going to culminate into different areas performing exceptionally well and other markets struggling in 2025. So as always, guys, this will be a bit of a watch, wait and see. It's going to be very interesting to see the predictions that I put on the board at APS and see how they come to fruition over the course this year as well. It'll be a wait and see, watch, wait and see at the end of this year to see what came to fruition. Now, guys, that's a wrap for another APS Weekly News Bulletin. I hope you took some great value out of it. If you did, please send it on to someone else you think could also take some great value and enjoy today's episode. If you haven't left a 5-star review yet, please jump on there, leave that 5-star review. If you haven't hit the follow or subscribe button, please do so on your favorite listening platform. And until next week, guys, that's another APS Weekly News Bulletin on the Scouting Australia podcast.